Good morning, traders. Welcome to the live stream. My name is Charles. I come from a community called Piratetraders, where we are focused on the ES, the NQ, and how they move through the two-way auction process. If you have any questions for me today, just go ahead and throw them in the chat, and I will answer them as best I can. If you are watching from the Discord, head to the Charles-Futures tab and leave your comments there, and I will respond as quickly as I can. All right, guys. Well, we are looking at the ES this morning. That is the futures contract for the S&P 500. And we're trying to predict where the market is going to go next. So as you heard me say, I use the auction process as a way to try to predict what the next thing the market is going to do will be. The auction process is not something where we always know what's going to happen. It's not like if we understand the auction process, it means we're always going to be able to explain every little thing that the market does and every little move that it makes. All it does is it gives us moments where we have an advantage, where we have an edge, where we can recognize an opportunity based on the auction process. Okay. And so when we're talking about this, what we had last week, particularly the last 3 days of last week, is what I call a market being pinned. So in a time like this, when the market is pinned, the moves that the market is making are not actually based on people changing their mind. It's not that like people are getting bullish because there's good news and they want to buy stocks. And so stocks start going up. And so the futures start to go up. It's not like that. That's normal trading. That's the way it works. People get bullish and they buy, they get bearish and they sell, and the market acts accordingly. When the market is pinned, it means that it is being artificially held in place by people who sell options. Okay. Sometimes the best way that people that sell options can protect themselves from losses is by keeping the market stuck in a certain range, because as long as it stays inside the range, they're burning theta. Okay, the options are becoming worth less and less and less for the people that bought them, taking risk off the table for people that sold them. So sometimes they just need to keep the market pinned for however long they need to keep the market pinned until the options that are keeping it pinned expire, and then the market is able to make a move. When the market is pinned, it is extremely erratic. Okay, the way it moves intraday will make no logical sense whatsoever. And generally, one of the best ways to know if the market is pinned is when nothing happens the way it's supposed to happen. If it's a day where like the first thing, the second thing, the third thing that the market does, nothing is functioning the way it should, that means it's probably a day where the market is being artificially held in place by those options market makers. Okay. So I'm just going to show you Friday's range real quick, and we're going to talk our way through it because I need you to understand that to be able to understand how I'm reading the market this morning. Okay. I promise I will tell you what's going to happen today, but first you need to understand how we got here and what's going on. So, yesterday morning, the market opens, it starts to sell off on Friday. First thing to the downside, immediately turns around and starts trending higher, starts one time framing higher. It literally spends all of about 5 minutes above the initial balance high. I mean, just no time at all. And then it completely reverses. So this is unusual. The move to get, straight down that turns around and starts one time framing higher, that's normal. That's usual. But instantly running out of steam like that, that's not normal, right? And instantly reversing and heading the opposite direction rather than just going sideways for a while, that is also not normal. So then the market started to liquidate. It got its first liquidation break plus new selling. Again, generally, when the market liquidates lower and it gets new selling, it will either continue to go lower or just stay lower for the rest of the day. If you get a liquidation break and new selling, you generally do not retrace back up. So we got the liquidation break, we got the new selling, we got another move to the downside, and then what did the market do? Immediately turned around and came all the way back up. Now, it didn't just come back up to the fairest price to do business, okay? It kept going, and it made a new high. Now, here's where the magic comes in. In the B period on Friday, I told everyone in my live stream that the market was going to close right about where it opened. Look where it closed. 5 points away from where it opened. So it made these huge trips up and down, so volatile, going so far. But where did it close? Same friggin' place that it opened. Okay? Because the market makers just really didn't want the market to go anywhere. That's what they were. So they'll let it go down a little bit, but then they come in and they start to hedge, and that causes the market to reverse and go up. And then they'll let it go up for a little bit, but then they'll start to hedge and it'll come down, and vice versa. Okay, so this is what happens when a market is pinned. So, all right. Now we're at the end of the day on Friday. We've watched the market move. We've closed right about where we opened. We know what's going on. The market is pinned. So what do we want to see next? Well, we want to see the market break away from the pin and make a move. Well, the fact that the overnight market over the weekend, both the last trade of Friday and the Sunday and last night, all of that combined stayed inside yesterday's range. So that is a sign that nothing has changed, that we are still doing what we were doing on Friday, right? We also have a bell-shaped curve in here. What does a bell-shaped curve tell us? Balance. It tells us uncertainty. It tells us two-sided trade. It tells us neither the buyers nor the sellers are in charge. So if we had this pinned market all week last week, where no one was in charge and the market was just bouncing around to squeeze traders short-term intraday and then turn around and go right back to where it was, and nothing has changed in the overnight market, what should we be thinking this Monday morning? That probably the market is still pinned. That probably nothing has changed. That probably we're going to have another day like Wednesday or Thursday or Friday of last week, where the market is going to make big, erratic moves out of nowhere that make no sense. And then right when you think that it's giving you information, the market starts going higher. Right when you think, okay, we have momentum up, that's when it's going to reverse completely. And right when you think, okay, cool, we got momentum down, that's when it's going to reverse completely. So when the market is like this, when it is pinned, it is not that it is untradeable. It is absolutely tradable, but you have to take the pin into account in your trading. You have to be saying to yourself, if I recognize that the market's behavior is a certain way, I'm going to adjust how I enter trades to that market behavior. A pinned market is going to be very erratic. So what does that mean? Well, first and foremost, you want to be much more cautious with entering trades. If normally you're taking 3 or 4 or 10 trades a day, maybe you want to be taking 1 or 2 or 3 trades, right? You want to be really focusing on getting those A+ setups where you feel very, very confident, rather than kind of just taking a swing at every potential trade, where in a normal market, that would be fine, right? You also want to lock in profits quickly. So whereas normally, let's say you got short this morning, market opens, you get short. Normally you might target a move to the overnight low, right? And so you'd be planning to take profits at 58.68. Well, instead today, maybe you take profits at this large node right here around 58.86 instead, because that has a higher probability of getting a fill. Doesn't mean you can't keep going to the overnight low, but if before you enter the trade, this thing is going to flip and reverse at any random moment, right? What do you want to be doing? Planning for that flip and reversal at any random moment in your trade setup, which means lock in profits sooner. Now you can do that by moving your stop and just sort of trailing your stop with the trade. And so if things randomly reverse, you get stopped out. You can do that by using tighter take profit targets. But my point is, if you're not taking it into account, if you're not, before the day even starts, saying to yourself, listen, I understand the market conditions, I'm going to adjust my trading today to better fit those market conditions, then you are missing out on a massive edge in trading. And that is what the auction process gives us, is that ability to recognize those opportunities. Okay, so now let's talk about today. We know how we got here. We know what's going on. We know the market is pinned. So what do we want to see the market do today to help us trust that we're ready to break away from the pin? Well, the first level above that really is standing out to me is this area right here between Friday's opening price and the point of control from Friday, the fairest price to do business. This has been a support and resistance level for a while, this area in here, okay? And so it will likely act as support and resistance again today. So as we're pushing up into it, we should assume that there will be resistance that will push us back down, okay? So that is the first area of interest for me. If you need an exact level, I would say 59.11, right there at the opening price from yesterday, from Friday. That would be the sort of level of interest above. So I'm going to call that my chop zone high, right? So this is an area where if the market can get there, depending on what happens, I can enter a trade. If the market gets there and it can't keep going up and it starts to come back down, I can enter a short. If it gets up there and it finds support and it keeps going, I can enter a long. This is the area where the market can flip in reverse. The momentum down can flip and become momentum up. So that's what I'll be watching. My chop zone low is going to be this node right here. You can see the market has reversed several times in this area in the past. So we're going to call that 58.80. Okay. And that's my chop zone low. So before the market even opens, I'm saying to myself, purely as a way to manage my emotions, right? Purely as a way to manage my own personal psychology. Not that there aren't necessarily, the market might go up and down and up and down and up and down in here, and it's a big range. And sure, you could make money. If you made a 10-point move, that's 10 points, regardless of when it happens or why it happens. But my point is, inside this box, inside this chop zone, I personally just don't know what the market's going to do next. It could go higher or lower. It could go nowhere. I literally don't know. So if I don't know, how can I enter trades? Right? How can I be entering trades in the first hour of the day if I literally have no clue what the market's going to do that day? If anything is possible. Looks like they just turned off those bracket bots, which they have been doing before market open, like clockwork actually last week. So this is another sign that whatever was happening last week is still happening. These are the type of behaviors that you want to train your brain to recognize. Every day last week, 15 minutes before the market opened, they turned off these weird fucking bracket bots. Do I know what to do with that as a trader? No, but I want to recognize when the change happens so I know when stuff is going on. So last week, weirdly, these started to disappear an hour before, or 15 minutes before the market opened. It's still happening. So whatever the market was doing last week, which was balancing by pin, it's probably still doing this week, right? These are the types of observations. So yeah, inside the chop zone, to me, at least within the first hour of the day, there will likely be no trades, okay? Because it could go up and then randomly reverse and come down. And you might be saying, well, Charles, you can make money off of going long while it's going up, and you can make money off of going short while it's going down. And no, you can't, not consistently. Not today and tomorrow and the next day and the next day and the next day. If you trade these sort of zones where no one knows what the market is going to do and everyone's just guessing, when you're right, you're just lucky. That's all it is. It's not a system that is repeatable. Whereas figuring out how to see a chop zone, figuring out how to recognize those areas where the market is going to flip and reverse, having the patience to wait until the market gets to one of those areas, observe what it is doing, and then take action, that is an edge. That is repeatable. That will give you better results again and again. It'll work tomorrow. It'll work the next day. It'll work the next day. It will work over and over and over again. This is what we call a systematic approach to trading. You don't just go long or short because you think the market is going to go up or down in a particular moment. You have a system for deciding where you go long and short, how you go long and short, and then you wait until the market gives you those specific opportunities. Then you enter the trade. Okay? And so a lot of you that are watching this, particularly those of you that are discovering me for the first time, what I'm guessing most of the time you're doing is you're looking for one specific little technical thing, the RSI is oversold or whatever it might be, and then you take a trade. And what I want you to ask yourself is, with that system, do you take context into account? Were you trading the same way on Friday that you were trading on Monday of last week? Because you shouldn't have been. They were totally different. The context of the market was totally different. At the beginning of the week, we had massive momentum to the upside. There was a huge potential for the market to move higher. But by the end of the week, we were in balance. And so you got to be able to recognize those changes in market behavior and then operate differently depending on the current environment. So today's environment is chop. It is balance. It is random reversals at unexpected moments. It is the market convincing you it's about to do something. Oh my God, it just broke through this level. It's finding support. It's going to go higher. And then out of nowhere, it completely reverses and goes the other way. That is the behavior we are expecting before the opening bell even rings. So we must include it in our plan for how we are going to trade today. So caution to the gamblers. Today is another day where you could get squeezed on both sides of the market pretty harsh, especially in the first hour. Now, let's say we get to the chop zone high or the chop zone low, and we start to see some momentum there. So the market starts to bring in new buyers, and it looks like it's going to go higher. To me, the first target to the upside is going to be getting to this node right here around 59.20, and then to Friday's high around 59.32. Okay, so if we get new buying at the chop zone high, I can go long targeting a move to the previous day's high. Okay, we'd have to see the new buying up there first, but that is possible. If the market fails there and it pulls back in, we can look for it to move all the way back to whatever is the opening price. So we open in 10 minutes. Let's say this is the opening price, 58.93. Then we could target a move to 58.93. It's the same thing at the low. The first target, if we get resistance, is the overnight low around 58.67. And then the next target is the previous day's low around 58.52. Okay. So this is a system that will work every day, no matter what. Whether the market is in balance or the market is trending, whether the market is highly volatile or the market is just stuck going nowhere all day. This system will work in all of these markets and all of these conditions. And so by recognizing the behavior today is likely to be very choppy and very confusing, I know to be cautious with those entries. Any questions on any of that from the chat? Billy K in the house. Good morning to you and welcome. Griff is here. He says, good morning. Let's go. Kevin is here. Good morning to you. Rich in the house. Welcome, welcome. Nap is here. Grizzly Bull. Will, good morning to you. Laura in the house. DNK is here. Percy, good morning. Jay says, good morning, all. Happy June in the trading paradise. XYZ, good morning to you. We got Trader in the Discord. And Steven, good morning to you guys and welcome. So no questions on anything I said this morning. Everybody perfectly understood. Awesome. And listen, I understand, especially if you're newer to trading. When you hear an experienced trader say, I have no clue what's going to happen, it could go up, down, or sideways, and I just have to wait and see. I understand that that's frustrating and that people want you to always have an answer and want you to always be able to explain everything the market is doing. But where I make my money is not in always knowing what the market is going to do. Okay, quite the contrary. Where I make my money is in having the patience to do nothing until the moment I know what the market is going to do, right? Until the moment where the information is giving me a clear sign of what to expect. And this morning is a morning where it is intentionally set up to give lots of fake signals. So I'll be very cautious to create a bias this morning. The last thing I want to mention, this is pretty cool. Bookmap is doing a little competition where you can take a picture of your trading desk and then they're going to choose the winner, and the winner is going to win $1,000. So the first prize is $1,000. The second prize is $500. The third prize is a 3-month Global Plus with data. Okay. I don't know what the criteria is for what they think is the best trading desk. Is it the one with the most screens? Is it the one that looks the most comfortable? What is it? I don't know. But if you would like to join the challenge, you don't even have to be a member of the Discord. You can literally just use the hashtag Bookmap Desk on any social media platform. So you can post on Instagram, X, LinkedIn, doesn't matter. As long as you use the hashtag Bookmap Desk, and somewhere, on the image, one of the screens has to have Bookmap on the screen. And the picture has to be within the last year. So you can't take a picture that you took last year and submit it this year. But anyway, if you're interested, that starts today. You can do it anytime between now and the end of the month, and you might win $1,000 just for showing off your trading desk. So why not give it a try? And again, all you have to do is post anywhere with the hashtag Bookmap Desk, and that'll pop up. And I will post a picture of mine, although I don't think my setup is very exciting, but I will post a picture of that later on today myself. Any questions? That Sax guy, good morning to you. Welcome. Debbie B in the house. She says all of that is key. Arjit is here. Good morning to you. Greenie. Hey, hey. Hey, hey, hey. Six minutes till the market opens. Let's take a quick look at the NQ. I have a feeling it's basically just doing the exact same thing as the ES in balance, but let's dig in and see if we can find some specific levels. Oh, man. Yeah. So literally, and NQ never does this, man. This is like some ES shit right here that NQ happens to be doing right now. So NQ had a balance area. They had a range where they were trading inside that range. They broke that range, turned around and re-entered, and now we've started trading that range once again. So I pretty much see this as a balance area right here for the NQ. We could use these two large nodes. Again, it never makes it this simple, but today it is. We could use these two large nodes of cumulative volume as our sort of balance area high and balance area low. And we would predict that the market is going to remain in balance as long as it needs to. And so what that would tell us is looking below that balance area low on Friday and re-entering tells us we're most likely to head to the upper end of balance. So we'd be most likely, the next stop would be 2150. 21,500, right, would be the next stop to the upside. Okay. The overnight trading inside that range, staying inside of it and creating that bell-shaped curve confirms the possibility that we are heading up to the opposite end of the range. Now, if the market opens today, gets below that overnight low and turns it into resistance, well, then it is no longer in this balance area. It is trying to break out to the downside, which is what it did on this day. Okay. And you can see that that was actually that was a Friday. So, you know, if you get below that overnight low and you get new selling, you definitely want to get bearish on the Q. So if you get below 21,162 with new selling with resistance, I would be very bearish on the Q to go lower. Until that happens, I would be bullish that the market is heading up to 21,524 because it is in balance. And the overnight range is telling us it is still in balance. And what do we learn about a market that's in balance? When it goes to one end, it turns around and heads to the other. Okay. So we went to one end. What are we doing now? Turning around and heading to the other. So I would say I would be like on the ES, I'm completely 30, 30, 30, you know, like 33% chance we go up, 33% chance we go down, 33% chance we go sideways. I would say there's a slightly higher probability with the NQ that it's going to go higher today. I would say there's like a, 45% chance it goes higher and then 30% chance it goes sideways and whatever's left that it goes lower. Don't make me do math, you sons of guns. Good morning to Jason. He says, smash the like for the captain. Yeah, let's get some likes up in here. Let's push the like button here. Let's get some likes up in here. Give the pirate a like. We got 110 people hanging out, 30 thumbs up. We can definitely do better. We can do better. So Tito says, what are some of the signs that you would use to enter the trade? That's a great question. So anytime I'm at a level where I'm interested in entering a trade, I'm looking for confirmation of whatever it is that's going to get me into that trade. So we talked about the chop zone high, right? That's going to be the area right around Friday's opening price. Okay. This area up here. So what do I want to see? First off, I want to watch how the market gets up there. because that's information in and of itself. Does the market open and immediately trade straight up there? Well, that's more bullish, right? That also increases the odds that we could get a look above and fail because it could all be short covering. Whereas if the market goes sideways for a few hours, okay, and then it slowly grinds up, that means that we're more likely to break and continue higher because we slowly worked our way up there rather than short covering took us up there right away. So the first question is, how do we get to that chop zone high? How do we get to that area that we're watching? The next question is, once it gets there, what does it do? Does it slow down? So let's say the tempo is moving relatively quickly. As it gets up there, does the tempo start to slow down? Does the market just literally start to move slower? Also, do the ranges get tighter, right? So if the move's up, it's moving kind of like this. It's making bigger moves. And then all of a sudden when it gets there, those moves start to get tighter and tighter and tighter and smaller and smaller. That's what I'm watching for. Okay. So when I see a change happening, whatever it may be, maybe the tempo is slowing down. Maybe the tempo is picking up. Maybe the volatility is getting wider ranges, or maybe it's getting tighter ranges. Maybe we're bringing in less and less volume as we work our way higher. Maybe we're bringing in more volume at the high. Depending on which of those things I see, that tells me what the market is doing. So if the market, as it works its way up there, if the volume is tapering off, as it did here, and the time is tapering off, I'm going to assume it's coming back down. So I'm not looking for a long trade at all. I'm then asking myself, what will get me short? And so in terms of entering the trade, it is merely just I reach a point where I personally feel confident that my call is right, that it is either going to fail or it is not. So let's look at this as the example. The market opens, and what are we immediately doing? Pop, 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 moving straight up. So this is not good, strong buying. This is shorts covering. This is people that were short from last week, expecting the market to open lower today. And when we opened inside Friday's range, they were like, ah, shit, we got to get out of this trade. And boop, 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 they all get squeezed. And by they, I mean a computer program somewhere, right? This is a server in a room somewhere that's programmed to do things at exact levels. And it got triggered this morning. And so boop, 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 the second the market opened, we started to get momentum up. So now what's our question? Well, can we get back up to this price right here, 59.09? Okay. If we can't get up there, the market is not going higher today. It's going lower. And so then I want to start asking myself, where would I get short? How could I get short? For me, there is no short right now during the initial balance, but if we can't get to this level, but that's what I would decide. Now, let's say the market comes back down here and it starts to spend some time and to grind and to build some strength in here. Well, then I can get bullish when the market gets up there, because it wasn't short covering that got us up. It was real buying, dip buying, that caused the market to go up. So what I'm doing all day, every day, is I am obsessing over these concepts. How did we get to where we are? Did we move here in a straight line? Boom, very quick. Is most of the volume up here a giant stop? One guy got stopped out for 135 contracts here. So is there really a bunch of new buying here, or is this just taking out this one big player? Right? I'm constantly observing these things. Once I feel I have an understanding of what the market is doing, I only need to be a little better than 50% sure, and I enter the trade. Okay. So right now, this is screaming look above and fail to me. Why? The first move up from here to here, we can see was shorts covering because of how quickly it moved. We see this large stop, 135 contracts here. By poking up to this overnight high, what did they do? They took out another 286 stops. So this is not strong buying that wants to keep taking the market higher all day. This is just squeezing sellers. Now, they can keep squeezing them, but we have to keep seeing these larger stops get taken out. There needs to be like 300 stops taken out and then 500 stops taken out. We got to keep taking out stops and stops and stops and stops, because that is all that is pushing the market higher at this exact moment. And whenever we run out of stops to take out, guess what the market is going to do? Right back down through the opening price. So this is our moment of truth. We are at the chop zone high. We took out a bunch of stops. Is that the high? Or can we bring in buyers up here and turn it into support? I'm looking for support at the halfback. If we get it, I will be bullish. Can they hold it? That's the question. Okay, new buying at the high increases the odds that we're going to get another poke to the upside. But again, I want to remind everyone, this is short covering and FOMO buying, not real good strong hand buying. So it is going up, and it looks like it's going to keep going up for the next few minutes, but it is not longable, in my opinion, because it is going to run out of steam and reverse at some point. If it comes back down to 59.06 and it finds support, then it's longable. But right now, we have to just watch these sellers get squeezed, watch these FOMO buyers step in, see how far they can push it, because these aren't strong hands at the high. So when you're watching Bookmap and you got the stops and icebergs thing going here, when you start to see these large orders get stopped out, just know the market cannot keep going up unless they can keep taking out those stops. So they took out 130. They needed to take out more to keep going. They were able to take out more. So now we've kept going. But they got to do it again. They got to poke up here and take out more stops and more stops. Otherwise, right back to the opening price. That is how short covering works. Sheena says, Charles, if the market makers are pinning the market for the theta decay, what expiration date are they targeting? Well, that's the thing. You never know. And I have never found a way to know. Like I said on Friday, I was hoping Friday would be it. I was hoping the options that expired on Friday would be enough. But the overnight auction has showed us that it was not, and that we are still pinned. So generally, if there's a big options expiry coming, like a, triple witching, that will do it. The end of the day on Friday will be the breakaway, the next Monday. But you never know. That's the thing. And if there was a way to know, I would just be an iron condor trader. I would just sit back, relax, wait until a day where the market is giving me the signals it's pinned, put on an iron condor, date it out for a week, and then just leave it and let it fucking churn. But you never know. That's the thing. So, and a lot of times I will recognize the market is pinned, and then that day will be the day it breaks away from the pin. So I just use it as a way to take my day trades. It's a framework for understanding, should I be entering trades today and what kind of trade should I be entering, Okay, so the market pushed higher, took out some stops, brought in some FOMO buyers, and got another push to the upside. Took out some more stops. Now they are trying to bring in more FOMO buyers here at the high. Okay, they got to get this move right now. I do mean literally right now. They got to start to pop higher, because if they don't, the market is going to come back in. This is the thing about short covering and FOMO. It's got to keep going. They got to keep that momentum. They got to keep that tempo. They got to keep taking out those stops. So now the bulls are starting to get a little bit tired. Tempo is slowing down. The number of stops they're taking out is getting smaller. They're running out of steam. So I am looking for resistance around 22 or 23, right in here, for a potential reversal back down. So see that? Stops are getting smaller. Got 135 here. Okay, we can keep going. Got 286 here. Okay, we can keep going. Oh, now we only got 78. Oh, shit. Now we only got 16. So the number of stops we're taking out is less and less and less. And since this whole move is just squeezing those shorts, is the move really going to keep going? Looking for resistance at 23. Oh, there was a question and it just disappeared as I was about to start reading it. Listen, whoever you are, I'm happy to answer your question, but you got to type it out again. It's like a ghost. Just disappeared. Poof. Okay, so the market has run out of shorts to squeeze temporarily. They pushed up as far as they could go. So if this move to the upside is going to keep going today, now is when they got to bring in the support. So that'll be somewhere between where price currently is, 59.10, and this node right here around 59.05. So that is where we expect the market to now find support and turn around and head higher. If it cannot find support here and it passes back through this node right here around 59.05, it will likely pass through the opening price. Okay. If it passes through the opening price, it is likely to head much lower down towards the, this area down here, the chop zone low. Okay. Because if they can't take the market higher, what they will turn around and do is try to take the market lower. So if the buyers don't want that to happen, if they don't want the market to go lower today, they got to hold this node around 59.05 or this thing will liquidate. And liquidation breaks happen because of FOMO. You guys can witness the market makers doing their thing right here in the Bookmap. Okay. For a regular trader, what they would want to see to get bullish is they'd want to see today's market get above Friday's opening price and then find support up there. And if they did, they would think, okay, this thing is bullish and it's going to go up. So what are they forcing the market to do in here right now using liquidity? They're forcing it to balance. They're forcing it to grind here to look like good, solid support for continuation to the upside. Okay? And we can see that because as price was moving up, they were adding liquidity above, putting in the liquidity up there. Okay? And what did that do? As price, let me just zoom out a little bit. As price was moving up into it, adding this liquidity did what? It scared price away. And so price started to move down. Okay? So then what did they do? Once they got down to the area they were looking to turn into support, right there around Friday's high, they flipped it. They got rid of the liquidity right here that was pushing the price away, and then they moved it down below the price right here. So what did price do at that moment? Turned around and started heading back up. So visually to traders right now, this looks like the market pushed higher and it's bringing in support. And it's just going to keep going higher all day. But all it will take is something randomly changing with the liquidity, and then the market continues lower. So this brings in those FOMO buyers up here. This gets them to go long, and then they have more juice for the squeeze when they pass back through the opening price later on in the day. Looks like we probably got some news. So we'll get a little chop, little volatility here. Okay, so this is the basic concept that we're thinking about right now. We're saying to ourselves, the market is pinned, so it's just balancing. The buyers or the sellers are not in charge. We're trying to figure out who's going to take charge of the market. The bulls took the first stab at it. They tried to take charge. They pushed the market up. They brought in new buyers. Yes, those buyers were FOMO and short covering, but they did, bring in some business up there. So now the bulls are in charge. As long as they can hold 59.05, as long as they can hold this node. But if they can't, crashing through it is the moment there is a change in the market. So we are testing that support right now. And if it breaks, that will likely lead to a move down towards the lower end of the overnight range, down here towards 58.76. So I just want you to say this to yourself as a way to understand markets. If they can't go higher, what will they do? They will go lower, because the market is just always trying to figure out where it will do business. So far this morning, the best way to do business was to push up to this overnight high and then get a bunch of FOMO buyers in. And now it looks like they're going to squeeze them. Yep. Now they're going to squeeze all those FOMO buyers they just brought in. We watched them use liquidity to convince people to go long in here. And now they're squeezing those longs. That's artificial. Right? That's the market just churning and burning. Jim Dalton calls it short-term traders picking each other's pockets. That's all that's happening right now. But if the bulls can hold this node at 59.05, which it does not look like they are going to, but if they could, then they could take charge. Then we could get bullish. Then we could assume the market is going to continue higher today. But they got to hold this node, and it does not look like they're going to. I see sellers. There are sellers. They want to break through this support. Hard Naming says, I know how Bookmap compares to Jigsaw or even ATS for trading based on order flow. I guess he's asking, do I know? No, this is the only one I've ever used is Bookmap, but I will leave it to the chat to try to answer that question. Many Names says, hello, I want to ask how to turn off active voice telling price. Oh, that is that's a Bookmap thing. You got to reach out to their customer support for that. I'm just a trader who uses Bookmap. But yes, that does sound annoying. There's a question here. Sheena says, I never look at Bookmap much as market profile is challenging enough. What are the red-green dots next to the stop numbers? So that's telling you whether it was longs or shorts getting stopped out. So if it's a green dot, it was shorts that got stopped out going long. If it was a red dot, it was buyers getting stopped out short. Okay, so we now have a look above and fail. This increases the odds that the market is going to head down towards the overnight lows. I just explained why. They opened, they tried to take the market higher. They could not. It increases the odds they're going to take the market lower. On top of that, we have a lot of buyers that were FOMO buyers this morning. Where do you think those stops are? They're right below that opening price. Okay. So now a lot of these buyers are going to be forced into sellers. And that's why I think we can get all the way down towards this area down here around 58.80. Okay. That is where I'd expect buyers to step in and try to take it up again, as I believe this is. Chop. So I would now describe myself as bearish as long as we remain below 59.05. We're now expecting previous support to become resistance, obviously. So if the sellers are going to remain in control, they should stay below 59.05. And we are looking for a move to 59.80. There's a question from the Discord. Master Zelda says, can you please explain the numbers on the heat map chart? How you set them up? Are they add-ons? The numbers on the heat map chart. So if you're talking about these right here, so this is, it is an add-on. You need the bundle. Man, liquidation. So can anybody tell me why the market is liquidating right now? Why the moment we passed through the opening price, we suddenly dropped 5 points in 2 seconds? It's a liquidation break. But why? Because of all the FOMO buying, you guys. I friggin' told you so. I friggin' told you. I told you that if the move up was just to take out stops, the way we would know that the move up was over was when those stops got smaller. We witnessed that happen. I told you that they were using order flow to get traders to think that they were getting support up here so that they would go long, and that those traders would have their stops below the opening price if we passed back through. And what just happened? We passed back through and we liquidated because everything I just described happened exactly as I described it. And so when you say to me, is Bookmap a valuable tool? Yes, I just used it in front of you. It was Bookmap that showed us the stops were getting smaller and smaller the higher we went. It was Bookmap that showed us that they were trying to use order flow to get traders long at the high, but that it was fake. It wasn't real. And we used, our understanding of the auction process to recognize that old business can be forced to become new business. You can force buyers to go short. You can force sellers to go long. How do you do it? You cross a threshold, a certain price level, where they are forced to change their mind. And then you get follow through. So you get them long up here, you push them through the opening price, and you force that next move lower. This is your edge, folks. Could I have predicted before the market opened that this was going to happen? Did I have a magical crystal ball? No, I did not. But I used the auction process to recognize where that chop zone is, okay? So that I would know when we were at that chop zone high, what to look for. When we got there, what did I see? I saw short covering and FOMO buying. So I said, I can't go long. I said, they might keep going, but I can't go long because I can't trust it. And then I used the order flow to recognize where that change in market happened. And I used the, market profile software showing me that opening price to recognize the exact level where the move gets triggered. So you build this knowledge one thing at a time. You understand what you're seeing. I'm seeing this. I'm seeing this. It doesn't guarantee you're going to get this follow through, but it just increases the odds that this is what's going to happen. So, okay, great. Charles, you just did it. You just Notre Dame'd us in real time, witnessing you predicting what will happen tick by tick as the market does exactly what you said. Now, tell us what's coming next. Tell us what's coming next. And the answer is, I have no idea. Right? We're going to push down into this area around 58.80, and anything can happen. We could push down there and find support and come all the way back up. We could push down there and find support and then just go sideways the rest of the day. We could push down there and not find support and liquidate through. We could push down there and grind through and come back up and find resistance. I can't know that. I can't know what comes next down here. I can just know that's where we're going, and I can know what to look for when we get there. This is how you trade. And so are you looking at these levels? Are you asking yourself these questions? Are you putting the context of what you're seeing into a narrative so that it makes sense? Even though all of this is happening right now, it's just computers, you guys. It's just computers. It's just bots. They're programmed to do what they're programmed to do all day, every day. So when I say, they're squeezing the buyers, it's one computer squeezing another computer, but that's how it works. Do you understand it? If not, you should. Nothing wrong with asking if RSI is oversold. Nothing in the world. But if you don't understand the context of the market, what is happening bigger picture, the RSI doesn't fucking matter. It is only when the bigger picture is telling you and the RSI tells you that it is then a valuable tool. And the same thing is true with everything. So what Market Profile and Bookmap does is let you have that context. It lets you understand bigger picture. What is the market doing? All right, missed a few questions, so I'm going to just scroll back up here and try to get to them. There's a question here. Should I get Bookmap Plus or Global? I would say Global for Forex. DNK says the ticks are still not at the zero. I don't know, actually. Yeah, they got there. They got resistance when they did. Although you probably left that comment a while ago. There's a question here. Where do I get my volume and market profile from? It's from a company called Window Trader. Window spelled without W at the end. Okay, so I see the liquidity is going dark on Bookmap. Seeing that the liquidity is beginning to disappear, At the same time that we're about to hit a round number, 10 a.m., my guess is there's some news that's going to dump at 10 a.m. So this is another great way to use this tool. It's just a reminder, so in a few seconds when the market starts, oh my God, it's like moving all over the place. You'll know it's just a news dump at 10 a.m. It'll be over in about a minute, and then we can get back to regular trading. Hard is naming says, why would the market makers care about the direction of the market if they make money on the spread? Well, there's different types of market makers and they all hedge differently. So market makers that sell options, okay, they don't care as they sell you the options where the market is going to go. So if you want to buy calls, they'll sell you all the calls you want to buy. If you want to buy puts, they'll sell you they don't give a shit about that. And they don't care about what price is doing prior to it. But once you've gone in and you've bought a bunch of calls from them, right? And obviously this gets much more complicated when you're talking about the scale of things, when you're talking about the S&P 500, but we'll keep it really simple. We'll just talk about it like, it's a small little company. All right, so here's our volatility based on news. Oh, wouldn't you know, they poked down and took out 200 stops. What a great place to turn around and head right back up. So yeah, like the market makers, they'll just keep selling and selling and selling whatever options people want to buy. But all of a sudden they realize that, everyone's buying call options. Well, then they will lose more money if the market goes up. Let's say it's an individual stock. That stock goes up, they will lose money. So there's lots of different ways that they can hedge themselves. They may buy calls that are way out of the money from a different market maker. They may buy puts. They may sell the actual shares of the stock itself to stop the market from going up. There's lots of different ways that they can hedge, but the point is that that's what they're doing. They're hedging. They're not making predictions about what the market is going to move. So when you have a market that's pinned, the hedge at that moment is sideways. It is the market chopping around and going nowhere. Okay, that's where they make their money. Now, intraday, they want large volatile moves because what does that do? It gets more people to buy and sell options, right? They just want business. And so, they allow these big fluctuations intraday because that gets lots of business happening. But by the end of the day or the end of the week or the end of whatever, they want that market back where they want it. And so that's what we keep in mind. Okay, so now we got some new information here. The market, whatever news just came out, that is causing new selling. So we had an initial liquidation, an initial drop. And now as we start to see these candles turning red down here in the current 30-minute profile, we recognize this is new selling. So these are people that after the news came out and the market moved, they are now shorting down here. So the question is, this same area I was just watching for potential support, 58.80, can this now become resistance? If it does not, we're heading back up to the opening price. If it does, we're continuing lower. And we're testing it right now. So do we get resistance right here around 80? This is another really important level for what's going to happen in the hours ahead. Will they hold it? Sellers hold it. Will they smack this market in the face? Or will chop continue the rest of the day? That's what we're finding out right now. Ooh, it's exciting. Deadhead says, can Bookmap completely replace TradingView? No, not completely, but it's getting there. They're adding to it and adding to it and adding to it, so I think it will. Okay, so we did not get that resistance. Oh, sorry, it might be a little early here. Oh, we are getting the resistance. Okay. Nope. Okay, so what this tells us now is that they tried to take the market higher and couldn't do it. They tried to take the market lower and couldn't do it. Remember, this was our chop zone high at the time the market opened. This was our chop zone low at the time the market opened. We tried to get above it, took us to the opposite end, tried to get below it. Now we're back in. So this means the chop will continue. And it means that we will likely have another very choppy sideways type of day. Okay. Now I'm going to get off the mic. And if 2 seconds after I get off, this thing starts to drop again, then you can get bearish. But right now, this is looking like it's going to rotate right back up through the opening price. It's dancing right. I mean, this is the resistance. We're in it right now. So I'm like, I'm going to turn off this live stream and then suddenly it's going to break lower and I'm going to look like a real douche if I say balance. So let's give it just another minute to work out this level. There's a lot of debate happening right now between buyers and sellers. And it's debate for the rest of the day. If the buyers break the market higher, we're going sideways. If the sellers can break it lower, we can get momentum down today. So this is big tug of war. We got to be patient. Let them chop it up. Okay, so yep, sideways day could not hold that resistance. So that just tells us that this market is in balance, right? It is just going sideways. It has not picked its direction for the day. So the next thing I would expect for the market to do is to head back up to the halfback around 58, looks like 95. Let me zoom in a little bit here. Yep, 94. So that's where I'd expect the market to go next. If it gets resistance here, I would look for it to take another poke at the lows. If it does not, I would look for it to pass through the opening price and then head up and test the resistance above that we just created around 59.14. As long as the market is inside this initial balance, as long as it is inside the range that we make within the first hour of the day, it will probably be very choppy. It'll probably be a very sideways, lots of this, random reversals, right? This is the bot shenanigans that drives us nuts, right? So they come back up, they get a little resistance. Okay, well, that's fine. But now the market should go lower. No, pop through, break through. Okay, great. We're going to turn into support. Now the market should go higher. No, pop back through again. You know, they do this when the market is imbalanced by pin. It's just what they do. They do a lot of, it looks like it's going to break higher, reverses. It looks like it's going to break lower, reverses. It looks like it's going to break higher, reverses. And so as long as we are inside this initial balance today, we should expect a ton of this. We should expect that all day long, they're going to keep doing this again and again and again. And really the market is just going to go sideways. It's just going to go up and down until we break out of that initial bounce. So the halfback, if it becomes resistance, could give you a heads up you're going to break the low. If we pass through and it becomes support, could give you a heads up it's going to break the high. But anything else in here is just going to be chop and sideways and grind. And yes, I wish it weren't so. Yes, I freaking hate it. But that's what we're getting. And so we just say, thank you, market. We're not going to get upset with the market. We're not going to allow it to get us emotionally annoyed. We're going to say, thank you, market, for the understanding of what you're doing today, which is helping me with my trades. Now I can go make money. With that, I must say goodbye to everyone. I must say farewell. Head on over to Bruce's stream if you are just a Bookmap person. If you are a member of the Pirate Traders Brigade, head on over to the private stream. I will see you there in about 5 minutes. If you are not a member of the Pirate Traders Brigade, I think you should give it a try. If you look up at the top of the screen, you will see a link, piratetraders.io/join. And you just head there, you sign up. It's $20 a month. You can cancel anytime. And you get live streams from me for the first hour of the day every single morning, doing literally what I just saw. So go back and replay the last hour. That's what I do every morning. And then also an email that I send out every day with my general bias, at least first thing in the morning. You know, it generally changes throughout the day, but I give you what I got first thing in the morning, and any potential levels where I think the market is a good place to take profits. Right now, I believe we took out all 3 of my profit targets to the upside. No, there's still one more. There's one more at yesterday's high, 2 more actually. So we took out 1 profit target to the upside and 2 to the downside. Okay. So these profit targets are they're designed to be very highly probable that we will get there. And I have a pretty good win rate with it. So if you are interested in that, please join the brigade. Like I said, it's just $20. That is literally less than a point on the ES. And you can pay for it for a whole month. And I promise you, with me giving you these guidance, these exact areas where the market will reverse and my input on what is happening at those areas, I guarantee you in the next month, I will help you either make 1 point of profit or save you from 1 point of losses. So the membership will absolutely pay for itself. So sign up, check it out, and we'd love to have you. Members of the brigade, let's set sail.